But let's take it across to Andrew Holland as well. He's joining us from Avendus Capital Public Markets to talk to us about the way forward. Andrew, what do you believe about the market mood right now? Do you think it's going to be a lot more sideways till that big event of election is out of the way, or even ahead of that, one can expect much higher levels for the Nifty?
So you kind of pretty much nailed it in terms of saying that confidence is back after that kind of shaky regulatory kind of fall in the small and mid caps. And I think that's, whilst it's not kind of so broad based at the moment, I think the markets have absorbed that and moved ahead. Obviously helped by global factors as well. And again, I think the momentum, in global markets is to the higher side. I saw reports today saying that Europe's looking cheap. So, and with China kind of, coming back a little bit with some of the data, I think that just bodes well for the markets in the short term. I still think there's possibility of still a pre-election rally. Given the kind of the positive tailwinds we're getting from global markets, and as I repeated myself, the confidence that the market's now feeling again after that bit of turmoil in the middle of March.
So Andrew, what's keeping you busy? Where have you taken chips off the table? Where are you looking at adding more positions?
So we've been adding more to the banking sector, Nikunj, because we've got the results season coming ahead of us, and I think there's two factors that the investors and we're all going to be looking at is really the confidence from the IT sector and the banking sector is the worst behind us. I still think for the IT sector, you're not going to get that kind of commentary. So I still think the IT sector is more of a play on interest rates coming down in the US, which gives the catalyst for the tech companies there. I think for the banking sector, if we're getting to the point where banks are saying that, the worst is over for NIMs, and you could look forward to kind of lower interest rates going forward, I think that's the key. If that was to happen, then I think the banking sector could lead the whole market higher again. And I think we're starting to see that stability in some of the share prices, of the larger banks, which have been under pressure, starting to kind of move forward again. And maybe the NIM story is something that's behind us, and the banking sector can actually kind of outperform, which it did last month. But it's been a huge underperformer for the last 6 to 7 months anyway. So I think that would be the catalyst, I believe, for the markets of that kind of pre-election rally.
Quite a bit of crack on ICICI Bank today, right? I mean, of course, there are others like Axis, Kotak as well, which are falling today. But particularly ICICI Bank, given that, you've always said that this is the leadership stock within the Nifty bank. What is it telling you?
Again, I think it's telling you that the private sector stocks are still not ready to get into a very strong breakout mode. So I think there was a phase where I think yesterday or day before ICICI Bank had come back to that 1100, 1120 mark. We were discussing this, that 1120 is a resistance zone, and it's always prudent to try and buy the stock on a confirmation of a breakout rather than anticipation of a breakout. Now, in that aspect, even the likes of Axis Bank, IndusInd Bank, these stocks have come very close to their breakout points, but they've not provided that much needed breakout for themselves in their respective shorter term time frame charts. But on the other hand, what we are seeing today is HDFC Bank coming out after I think 1.5 or 2 months of consolidation, breaking past about that 1470, 1475 mark. So this is almost like a 100-pointer range breakout for HDFC Bank. The stock is still reading below its 200 moving average. Today it's just managed to break past or retest the 50 DMA. So I think if this 100-pointer range gets prolonged for HDFC Bank, we could be looking at 15, 40, 15 levels for the stocks. That could be the only solace for the private sector banking names so far.
Andrew, haven't we discussed this time and again that, okay, go and buy banks. Just buy banks. And please buy private banks because they are cheap. They've done nothing. They have good balance sheets. They have good credit ratios. Buy banks and buy both Kotak and HDFC Bank. I think this is the most consensus common trade across brokerage firms, across sell side, across buy side. Yet, nobody cares.
Yeah, I know it's a good point. We've all been sitting there underperforming. But, Nikunj, what I would say is that, you've taken some of the pain of some underperformance. But again, within that, you've had through the results season, you've had that opportunity to make some good money, both on the long side and the short side. I think that's what a lot of fund managers have been doing, including us. So take advantage of some of these movements within the sector. So you might like the banking sector, but you don't have to be, because we run a long-short fund, we don't have to be in love with any one stock, be either on the buy side or the short side. So that's how you could maneuver your way around within the sector. And of course, then you can look at PSU banks and NBFCs as well as part of that play. So it's there's money to be made, just necessarily not in some of the larger banks in the very short term. But I think that's going to change if the NIM story is going to be stabilized, which I think it will be now.
Very well for itself. It is Aditya Birla Capital along with Aditya Birla Financial, Aditya Birla Retail. Now, Aditya Birla Retail, of course, news specific. What Aditya Birla Retail is doing is they're splitting the business in two parts. They have a lifestyle business which includes brands like Louis Philippe, Hans Innerwear. They've got that, all the lifestyle brands which account for bulk of the cash flow and bulk of the profit, that would move into one entity. Second, they've got all the recently acquired businesses, TCNS Clothing, they've got Galeries Lafayette, they've got some designer brands where they've picked up off late. All that low margin, high growth, futuristic business moves into another basket which will have debt component which will be much higher. So somewhere markets are saying, okay, now you're separating really the good and the bad business, and this could take about 12 to 18 months, but it's an attempt in the right direction where the Birla Group, which actually went on an acquisition binge, just think about it, what all they've acquired. I was just counting. They acquired Pantaloon, they acquired Galeries Lafayette, they acquired Forever 21.
I'm just talking about brands which relate to us.
Sabyasachi as well, right?
And Sabyasachi as well.
I think Ritu Berry,
Yeah,
TCNS Clothing.
correct, yeah. Quite a few actually.
And their main brands which give them cash is actually Alan Solly, it is Louis Philippe. Those are the brands which give them cash. And those are, Madura Garments के अंदर हैं सब वो lifestyle brands. And you are actually not getting the true value of that brand which has built the business. You've gone in an acquisition binge. Yeah. And that is what they're trying to do.
But you really think this can reverse and probably get them closer to trends performance? I think by a huge difference, it's just poles apart right now.
Trent is a retailer.
Yeah.
Madura Garment is like a fashion house.
Aggregator
of all sorts where they are retailing and they are only into apparel. Trent has managed to break the code by Zudio. I don't think anybody has really gone anywhere close to getting that format right, including good old DMart. Plus Trent has got Star Bazaar where they moved actually into grocery retail. So they managed to crack the code in terms of keeping it highly affordable, keeping it very simple, and only expand when your balance sheet allows you. On the other hand, Aditya Birla Fashion has gone on some kind of an acquisition binge. Do bhi milta hai, le lo. Whatever is available, just keep on buying it.
The Collective, Galeries Lafayette, lots of other luxury brands, Jaipur, Masaba, Sabyasachi, TCNS, Pantaloons, and these are all under AB Fashion. What you were talking about, which is the mainstay business, the cash generating business, and that has more affordable line. Surprisingly, Forever 21 and Reebok is under Madura Fashion. So is American Eagle, Peter England, Alan Solly, Van Heusen.
Van Heusen is a big brand. Louis Philippe is a big brand. These are the brands which essentially dominate the men's fashion brand, formal wear. Market leader there. And look at the market cap. Why? Because you've made such unnecessary acquisitions. I think they've moved also into ethnic wear. I was reading it somewhere. And my jaw dropped.
Sabyasachi and all his ethnic portfolio itself.
No, proper.
And
Koti.
Jaipur and Masaba, CNS, Tasva. Yeah.
I'm guessing there'll be a lot more coming as well.
Andrew, your comments?
Well, I can't comment on the individual stock, but
on the brands, not stocks.
I've seen some.
You can comment on the brands, my friend. Masaba, Forever Young, you can Forever 21, Forever 21. I beg your pardon.
Let me ask you, Dickens. Are you wearing any Peter England shirts or Alan Solly? Or?
No, it just it's an old suit, old suit which I picked up from some other retailer.
Trend?
No, it's Zara.
Yeah, so Trent.
Trent as in, yeah, Trent is the
Yeah.
owner. Trent is the owner, yeah, of course. Yeah, my bad. But yeah, in the menswear, if you really think about it, stock which have done rather well off late, and I think that's Raymond. So, while we may talk about Trent and we may talk about Aditya Birla Fashion Retail, Raymond has managed to hit out of the park because of this sheer restructuring they've done. They've sold their so-called consumer business or consumer staples business or the cosmetic business to Godrej. They've built in a real estate business which gives you a embedded value for the listed entity, and Raymond, blink of an eye, in just 4 years has been more like 7x. Andrew, what's been your favorite, where have you allocated capital which is purely based on Indian mass consumption growing? I mean, what is the best consumer play?
Actually, we've been playing the beverages, on the premiumization, from both alcoholic and non-alcoholic beverages, and I think that's something that's played out very well over the past few years. I think that's it's still a runway which I think has it's a very long runway. In fact, as per capita GDP moves higher, and people start spending more. I mean, I'm sure your coffee is from one of the outlets downstairs on your building. So that's where people are heading, and people are experiencing more and want to experience more, and particularly with the younger generation. So I think the premiumization is something which is whilst if you look at, say, the alcohol companies, it's all about premiumization. That's where they're getting the big uplift in margins. So that will continue, and that's really why I feel we want to play the consumer kind of side of spending, because I think that's still a very early kind of days in terms of the move towards premiumization. So I think it's a great theme, but it's something that's not going to go away from us.
Taken. Trent for now, of course, has done quite well for itself, and Tata Consumers is the other one that we have been flagging out. It's up almost 4% as we speak. So good gains coming in on Tata Consumers, and that at a time when the rest of the market is actually coming off. Time now to take a short breather on the show. Don't go anywhere.
For the Bank Nifty, red for the Sensex, but the small cap index is just about holding on very, very nicely. Naresh, just when it appears that the Bank Nifty is ready to go and HDFC Bank will do the honors of showing some leadership, it just fizzles out. I mean, I don't know how many times we've discussed that Bank Nifty acha lag raha hai and HDFC Bank is on a verge of a breakout. The problem is the breakout never happens. So see, Andrew, look at Andrew also. The poor guy is waiting. HDFC Bank is not going higher. Right, Andrew?
So we've had a lot of false starts across the board. So ICICI Bank came close to 1100, faltered. But today, HDFC Bank has crossed that 1470 mark and it is sustaining. But on the same day, you see Kotak Mahindra Bank take a dip. You have Axis Bank taking a dip. So the bias is positive. Momentum is not coming up. So if you get a momentum on one banking name, the other one flops. But the structure is very clear. Slowly and steadily, the Bank Nifty has come to 48,000. It's coming on verge of a major breakout. So once the flows shift, it could be a breakout which would surprise on the upside, because the more it tests a resistance level, the higher the chances of a breakout are. So my view is large cap banking could surprise, but one will have to give it a little more time.
Okay. City Union Bank up 3%. I think, Kunal, you were speaking about it in the morning?
Yeah.
City Union Bank.
Yeah.
Okay, where is that one headed?
So I think we were discussing this on the chart busters. 145 was the breakout point for the stock. 155 is the first target. This takes the stock back towards Jan 2024, where the stock started to get to first phase of correction. And I think beyond that, we could be looking at a retest of the previous major highs, 175 for City Union Bank.
Andrew, what is your view on small banks, they are not expensive by any yardstick. Okay, large banks have CASA, they have right to win, they have great brands. But the incremental growth in small banks is actually not bad. If I look at, let's say, Federal Bank, City Union Bank, throw in a Karnataka Bank, quietly but clearly they are growing at 15-20%, which is actually quite enviable given that large cap banks are struggling.
It is, and I think that's why you're seeing the the outperformance of some of the PSU banks and these smaller banks against the large banks. And I think that the concerns on the large banks remain, right. It's all about NIMs and then the unsecured loans and possible RBI intervention. So that's been playing on investors' minds, whereas the smaller banks are not having those problems right this second. So I think it's a matter of time, and that the large cap banks will perform. And I'm saying that if the commentary in the results season is more positive, that we're that the worst is kind of over, then you'll see a very strong rally because I think everyone's kind of underweighted the large caps in terms of the banks, in terms of foreign investors in particular. Been using the banking sector as a way of when they got redemptions in their emerging market funds of taking money off the table. It's liquidity as well, and of course with HDFC as a bank, there's a possibility of this MSCI kind of increase in weightage. So I think that's something that the market is continuing to kind of favour. And then maybe that's why you're seeing this accumulation and stable kind of price move upwards for HDFC Bank compared to the other large banks more recently.
That's HDFC Bank, although it's been quite a steady show, right? Kunal, almost 1.5% on a daily basis.
Yeah, I think, and over the last 1.5 months, see, because we have to look at this in the context of the Jan selling for HDFC Bank. The selling was very sharp, very steep and very sudden. So from 1700 odd levels towards a point when the stock had come back towards 1350, 1360 mark, and that too in a matter of just 1.5 odd month, or in fact less than 1 month for HDFC Bank. Now for the stock to recover, the process is going to be very slow, gradual. But in the process of moving up higher, if the stock breaks resistances, shows signs of resilience, and there's incremental or rather slight increase in volumes for the stock on the way up rather than on the way down, then we see this as a change of a sign in terms of trends for HDFC Bank. And over the last 1 month, we've seen the steady change so far. So maybe the stock is not into the thick of momentum. That may probably come back once the stock breaks past about the 200-day moving average. But as of now, I would believe that one should look to pray for another 40 to 50 rupees points on the higher side for HDFC Bank.
Okay, point taken. Andrew, what's your view on PSU stocks? I mean, last year it was all about the PSU power names, defense names, railways, and even other verticals which were actually perking up, oil and gas names to add to that list. Do you think this year probably one should be a lot more tempered, both in terms of expectation and maybe book some profits? Or do you think given the entire turnaround, there are more legs to the rally and this year again probably could be another uptick for them?
It's a great point, and the way I answer it is that the sectors you mentioned, defence, railways, oil and gas, it's full of PSU stocks. So unless I still feel like the kind of renewables, power, defence and railways, the spending is going to continue by the government. There's no two ways about it. So you're led towards the PSU side of the stocks there anyway. So the kind of long-term theme playing out there is hard to kind of ignore. So you have to be in these stocks. I don't think you can just say because it's a PSU. I think you need to forget that and say they're in the right sector at the right time where there's spending going on, and they will capture a lot of that market share of the new orders. So therefore, whatever ratings that you see at the moment are probably way below what they'd be in 2 years' time, with the earnings growth that you'll see because of that order kind of surge over the next 2 to 3 years.
Well, the one thing which is on everyone's mind is definitely the onset of the hotter summers. It's been getting hotter by the day, at least here in Mumbai. And the IMD is predicting that's pretty much going to be the case for the entire country. And they are warning about prolonged heat waves as well. In fact, we did speak with Nilesh Gupta from Vijay Sales about how he anticipates consumer durable sales are going to be or whether they're already picking up. And here's what he actually told us.
Now, this year, as per the IMD multi-model coupled model forecast, it shows that most parts of the country are likely to experience above normal temperature during the season, April to June, as well as April, except a few areas of Northeast and some pockets of Northwest India and along the West Coast. Otherwise, almost all parts of the country we are likely to get above normal, both maximum as well as minimum temperatures. Once we say that this is being an El Nino year, generally El Nino year, it has been seen that we get above normal temperature. So when you have a temperatures are likely to be above normal, we also likely to experience above normal heat wave days over most parts of the country.
I think this year we are in for a good summer sales. So what we expect is this year, the way things are spanning out, the way prediction is there for heat waves to be of 15 to 20 days, we should see an upward of at least 20% growth this year over last year. And if things fall in place, it could be a little more also. And for the first time in so many years, I'm feeling if this is what is going to happen, possibly during the fag end or maybe a little over, we may see some shortages also happening of these cooling products.
Hot summer, and will that have an impact on white good demands? Will that have an impact on air conditioning demand? Well, some of the managements, they do feel that it will have an impact per se. Some stocks which are bouncing right back up from the, I wouldn't say from the lowest point of the, but they're definitely moving towards higher points. BEL, you've got Aditya Birla Capital, you've got Zomato which has recovered, and Z also is marching towards the day's high. So some traction clearly is visible. In fact, Power is having a strong day. Reliance Power, Suzlon, what else? SJVN, that is having a strong day, so to speak. You've got a solid price action even in NTPC. So some of these stocks are actually having a good day, so to speak. When it comes to the value transaction, which is where I always look for interesting names, I think Jio Financial Services volumes are strong, but price action is not strong. And then Vedanta. Naresh, we've not discussed Vedanta. I mean, could this be the stock of 2024? It has done everything what typically you've liked in the past. It has consolidated for years now. No one likes it. No one owns it. And now when the cycle tide will turn, this could be the one which suddenly will start flying.
So starting off, I have a bias here, I have a position. But if you look at Vedanta, the way to look at it is the stock price looks like the all-time highs are at 430, 440. But as of today, if you add up the dividends and if you adjust it for dividends, the stock has hit a new all-time high. So it does not really show you the kind of, say, the move which has happened over the last 2 years. So the stock has actually crossed into new all-time highs today on a dividend adjusted basis. In the short run, for the last almost 2 months, it made 3 attempts around the 285 mark. Also, say July, August, that was a time where it was 285 to 90 was a resistance. So roughly 6 to 8 months of a breakout. Three bottoms done around 255, 260. So a classical short-term breakout, which would have a price of 350 in the short run. So looks very positive. And the whole metal and mining space, it's not just India. You look at the Dow Jones metals and mining space, it has hit a new all-time high. You could pick up any metals and mining stock, commodity stock across the world, and we are seeing breakouts. And you look at the CRB index, which is composed of multiple commodities, it has hit a multi-month, multi-year high. So the structure is there setting up for a commodity cycle. And a lot of names across the board have gone back to the prices where they were in 2021 and crossing that. So even a Hindustan Zinc actually looks interesting on a dividend adjusted basis. The stock is 3-4% away from an all-time high.
Andrew, always having you on the show. We let you go on that note. Let's get in some closing trades and strategies as well on that note. Kunal, what's on your list?
So I'll go with SAIL as a buy. The stock confirming a breakout above 140.42 mark, which was the previous resistance point for the stock on the weekly and the monthly time frame.
SAIL, that's a buy on dips from Kunal. Naresh, what about your closing trade?
Again, a metal stock, JSW Steel, which has broken out, still away from an all-time high, could actually go towards an all-time high in the short run. So looking at it as a short-term trade.
If you like this video, then like, share and subscribe to ET Now.